Hey everyone, welcome back to the Commercial Real Estate Library podcast. Today we are joined by the CEO and founder of Fusion Homes, Lee Piccoli. Lee, thanks for joining us.
Thanks for having me, guys. I'm excited.
So before we dive into everything, can you give us a little background context of what is Fusion Homes? What are you guys known for?
Well, it's actually our 20-year anniversary this year. Not to date myself, but from the time that I founded the company, we really wanted to put the customer experience at the center of everything we do. So 20 years ago when I founded Fusion, it was about three things. It was about close on time, close deficiency free, and run an industry leading after sales service program. Since then, obviously, we've evolved and things, but we've been fortunate enough to be recognized as highest in Ontario in customer satisfaction by Terrion 6 times, twice as one of Canada's top employers. And so now, Guelph, Kitchener, and Waterloo are the markets that are predominant for us. We build high-rise and low-rise, and we do a lot of land development as well.
Interesting. And can you give us an idea of the scale of, how many homes have you built in 20-year history of Fusion?
That's a good question. I don't know. I've never counted actually. We do 300 to 500 a year, depending on the year. I would venture to guess like 2,000 to 4,000, somewhere in there. But I could get somebody to verify that. Sorry, guys.
Yeah, no problem.
Yeah.
Okay. Whenever you search Lee Piccoli on the internet, it comes up as this entrepreneur, started young. Garrett was telling me, I think you started when you were 24 or something like that. Yeah. Can you give us a little history of kind of your career and how you got to where you are?
Mm-hmm. So I actually started Fusion with a partner. He had experience in building homes. So at the beginning, it was just the two of us. We did everything. He did all the construction management. I did everything else, answered phones, sat in the sales center, sold homes, did accounting, you name it. We were reasonably successful, started to grow. I bought him out in 2003. So since then I've been the sole shareholder. Hit some obstacles along the way, obviously. 2014 to 2017 was probably the time of our most rapid growth. We quadrupled the size of the company in 3 years, which I'm not sure if I'd ever want to do again, to be honest. And really fortunate to be where we are today.
So why is it that you would never want to quadruple the size of your company again?
Our business is tough to scale. A few things. I think that number one, when you grow that fast, it really puts the culture at risk. When you quadruple in 3 years, invariably, what happens is that the people you hired last month are training the people that you hired this month. And, for a company that's always been heavily based in culture and values, to bring that many new people on in such a short period of time, at the end of the day, like, culture is a democracy, and you can't tell people what to believe in. And I think when you bring that many new people on at once, it's gonna strain the culture, and it's gonna strain the values, and strains the processes. It's a completely different way of doing business from when you're building 100 homes a year to 400 homes a year. And so it was a crazy time. We pulled it off. We made it through. But yeah, I don't know if I would do it that quickly again.
Right. It was a learning curve.
It's a big, steep learning curve.
Right. So I think like we haven't really had very many guests on the residential side of building, home by home or community by community. So this is really exciting, and I'm interested in getting into kind of, what have been the biggest challenges and opportunities over the past 5 years? What have been the biggest changes, and what's to come? Especially in this post-COVID era. But first, I want to rewind and talk about how did you get started? So you said you started it with a partner. What does that look like? I'm always interested for people coming up and trying to do this. Are you buying your first plot of land? How do you're going out and hiring? How does it all unfold from the first project?
Yeah, great question. So, obviously starting that young, capital is a huge constraint. So we didn't have money to go and buy a plot of raw land and develop it. I remember so many times early in my career where, I would hear about a piece of land for sale and be like, oh man, I'm gonna buy that land. That's a great piece of land. And I go home and I'd be like, oh damn, I don't have any money. So I guess we can't do that. Capital's scarce. So I think, for us, it was kind of taking the stuff that fell off everybody else's table, like taking the scraps and making the best out of it, trying to make a name for yourself. Hiring people was a major challenge. You have a young person with a young company with very little track record. So trying to convince people to join you, again, is challenging. So it's really, I was really fortunate that early on, I got to hire a couple or three incredible individuals that are still with the company now, and have helped me grow it from nothing to where we are today. So very, very grateful for that. But certainly we weren't hiring Harvard MBAs at the beginning, and things. So I think it's what I say to everybody is like, you can't play the game until you get in the game. So there's a piece of it that's just like, you're not going to figure out everything before you start. Just jump in, be agile, be adaptable, and be prepared to get punched in the mouth a couple of times and, pick yourself back up and trying to keep moving forward. Because most of it is trying to make the best out of very little when you don't have a lot of resources.
Okay.
Does that help you, Dama? Are you gonna start a career in single-family home construction?
No, just well, maybe, I don't know. Who knows? This is early in the podcast.
I'll have you convinced by the end, don't worry.
Yeah, exactly. Lee, Garrett and I were just having this discussion like right before the podcast on, Garrett has bought a residential property in Windsor, a rental property, and is looking at other opportunities in London. And I'm kind of looking at my first opportunities now, and it's just
nice.
And that was his advice. You just gotta get in and then figure it out. Just kind of, just jump. So.
Yeah, I honestly, like, I have a lot of people ask me that question, and I say the same thing. And at the end of the day, like, you have to believe in yourself, because there's going to be times where you get knocked down, and like, there's nobody to pick you up except yourself. So, yeah, jump in and figure it out as you go along.
So Lee, as Damon did mention, I believe you're probably the first individual that we've actually had on the podcast that does single-family home construction. A lot of people might not understand the intricacies of that process. Could you just briefly sort of just walk through what happens from, the selection of a site to, giving somebody the keys to the actual home itself?
Yeah, of course. So number one, I feel honored having, being a res guy on a commercial podcast. So thank you. As far as the process goes, obviously it depends on what stage the land is at, but, maybe I'll just kind of give you an overview of, say an early stage piece of land. One of the things we're starting to see now, especially in Guelph, is this notion of an urban design master plan. And where this is starting to fit in right now is between the official plan and zoning. So you buy a piece of land, in the official plan it's designated, residential or whatever. Before we're going to zoning now, the municipality is asking for an urban design master plan, which essentially kind of dictates things like built form, height, density, amenities, and things like that. So that's something that is fairly new to us. We did it in our Metalworks project. We're being asked to do it again on another piece of land that we own here. So that being a new phenomena. Next would come rezoning and draft plan approval, which sometimes you can run in parallel with each other. Rezoning obviously, dealing with higher level matters, draft plan approval, getting into more specifics. Once we're draft plan approved, we do our engineering, grading, servicing plans, landscaping plans. We get all of those approved, and then we can actually start putting pipe in the ground and doing curbs and asphalt and things, and then we get building permits.
Okay. And how long does that process take, typically?
It depends. Like if you're starting at urban design master plan and going through a rezoning, could be 5 years. If you're going and fighting the municipality on things and fighting neighbors, it could be longer, 7, sometimes 10. But I'd say if you're starting really early stage, like 5 would be considered fast.
Gotcha.
Wow.
And
sorry, how long do you typically own the land before you're starting it through that process? Do you have a big land bank all over the Guelph Kitchener area, or?
It depends. We have lands at different stages. Sometimes we'll buy land that's draft approved and be able to just do our engineering design things and go for permits, which takes a year or two. We do have a land assembly that we're putting together where we're just starting the urban design master plan now. And yeah, we're probably contemplating building permits in 2025, maybe 26, kind of thing. Hopefully we won't encounter a lot of resistance, but in this particular assembly, you have, we have 80% of it, but then there's still the other 20% has, 5 or 6 landowners that we have to collaborate with, hopefully go forward to the city with a unified front and, all of us on the same page as far as uses and as far as density and things like this. But it can be quite a complicated process, and the approvals process is getting more and more complicated. What we're finding, and this is not an indictment against any city staff. I think we're really lucky. We get to work with a lot of amazing people at all the municipalities that we work with, but they have a lot of competing priorities. Right. So you're things like, affordable housing versus development charges, increased urban design standards, increased architectural standards, longer processes. We're finding a lot of tension right now between, parking and walkability. So what we're seeing is, the push towards, less emphasis on the car, more walkable communities. But then you go forward with a proposal for a high-rise building that has less parking than what's outlined in the zoning bylaw, and you start getting pushback from people saying, well, now people are going to be parking on the streets, and we're going to have traffic issues and this and that. So so it's these competing priorities that are posing a lot of challenges. Sustainability is a big one right now. Every municipality wants it. Nobody knows how to do it. Nobody knows how to do net zero communities on a mass scale. Even things like like commercial land. You know, we're getting pushback from municipalities being like, oh, you know, we want a grocery store here, or we want commercial, and we're going back and we're saying, okay, but no grocery stores want to go there.
Yeah.
You know, so it's the process is getting more arduous, more complex, and taking longer.
Interesting. Is that kind of, do you think the main thing that's changed over the past 5 years or so, or are there like basically what have been the biggest changes over the past few years? Is it the changing costs to construct? Is it the municipalities changing their behavior? What do you think's had the most influence?
I think that land supply is playing a huge role in it. So we're seeing a big shift more and more into higher density product because number one, you know, it's really hard to buy low-rise land. There's just not a lot of it. Number two, municipalities have density requirements that they have to meet, which is forcing more density onto smaller pieces of land. You know, affordability, again, as land prices go up, you have to fit houses on smaller plots of land and create smaller units to make product affordable for people to buy. So I think that's been a massive driver in what we're seeing. Like, you know, 5 years ago in Guelph, Kitchener, Waterloo, you hardly saw any stacked townhouse product. Mm-hmm. Now you're seeing it everywhere, and that stacked townhouse product is kind of filling that gap between, you know, your condo and your conventional two-story townhouse. You know, there's a big gap in price between those two products, and it's getting filled by stacked right now. You know, we're seeing a lot more high-rise than we did 5 years ago. Like, I think, you know, 5 years ago, downtown Kitchener, you know, there would be one or two buildings going up. Now they're going up everywhere. You know, same in Waterloo. So I think that's been a big driver as well. Yeah, and then that's translated into increased costs, especially on the higher density product. You know, in our Metalworks project between phases 2 and 3, which was probably, you know, a year to 18-month gap in construction, we saw our construction costs on building envelope, which would be, you know, forming concrete, window wall. We saw them go up like 40 to 50% just in that category in a year to 18 months. Yeah, it was crazy.
Horrifying.
So, yeah. Especially when you have a lot of it pre-sold already.
Right.
Horrifying.
Yeah. Oh my God.
How are like, obviously costs are probably one of the biggest things that you have to factor in. Like land might not be as important as sort of a higher density site where the land on a per square foot basis is obviously significantly higher. How are you affected by things like, you know, the trade war with China and the aluminum tariffs that were on and off, and steel and stuff like that? And obviously now wood has gone up significantly because everybody's renovating their basement and sucking all the wood out of the industry.
Yeah, it's a huge challenge. It's always like, you know, it's balancing the tension between wanting to get a lot of pre-sales, you know, wanting to have that security of saying, oh, you know, we have 70% of our building pre-sold, or we have, you know, a year runway of pre-sales and low rise, you know, that security versus then being exposed to some of those shocks that you'll see on the cost side. Whether, I mean, when the aluminum tariffs hit a few years ago, you know, we felt it. We are definitely feeling the lumber right now. You know, in a matter of a month, our lumber costs went up 50%, and we have a year of pre-sales on low rise, right? So, you know, we're you know, so again, like balancing that tension is key. You know, sometimes you win, sometimes you lose. Like a lot of times it just comes out of our margin. You know, especially like with this lumber price increase, we did not see this coming. Like we were thinking the opposite. We thought we'd see some you know, some air come out of the balloon on the cost side, but so this we did not see this one coming at all.
I can't even. You sell 100 buildings, and then your costs for certain materials increased by 50%. It's just wild. So let's talk about the how the COVID-19 kind of impacted your business. How as it was coming in, did you guys stop your construction, and how long did that last, and kind of what's the outlook now?
Yeah. So famous last words. I said in the middle of January, I said to somebody, I said, nobody's going to be talking about this COVID stuff in a month. So,
yeah.
So then March came, and I remember I was actually in the city on a Thursday. It was the day after the NBA season got canceled, and had a conference call with my senior team, and all of us kind of standing around being like, okay, what do we do? And we decided at that point to close the office down and have everybody work remotely. The following week, it was we put a sort of a COVID SWAT team together, and it was meetings with that team every day. By the end of that week, what we had come to was that we were in an environment with a lot of competing priorities. We had employee safety, we had employee financial security, well-being, the financial well-being of the company, our customers who were waiting to have homes built for them, and we said, there's no possible way that we're gonna run the table on these priorities and satisfy all of them. So we stood back, we said, what's the most important thing right now? We came up with employee safety. And we said, okay, well, if employee safety is the most important thing, we need to close our job sites down. Because at that time, our job sites were not safe for our employees or our trades to work on. So this was before the Ford announcement that we had to close down. We voluntarily shut down all of our job sites for 2 weeks, and we put a safe work system in place that at the time and still I feel is at or near the top of the industry. The work that our team did in 2 weeks, I tell you, if it was 6 months before, probably would have taken us a year to put this together. Like it was unbelievable. They rallied so well, put an incredible system in place. So we closed down for 2 weeks, and then we rolled it out, and then Mr. Ford shut us down. But we've been using it ever since, and knock on wood, a lot of positive results and a lot of success with it. And then we kind of turned our minds to how do we manage this environment? And what I think is different about what we've gone through and what we continue to go through is we're managing uncertainty, not risk. I think we're all used to managing risk. Risk is probabilistic, whereas uncertainty, you can't assign probabilities to different outcomes. And the traditional risk management framework of frequency and consequence doesn't work in this environment, because we're in an environment of unknown frequency and unknown consequence. So what we decided was that we were going to prioritize agility over everything else. And what that means for us is agility financially and agility operationally. Like those are the two areas that we said we wanted to be the most agile. And so we were lucky from the standpoint, like we really started to deleverage the company probably 18 months ago, looking at our balance sheet and making sure that, we were taking on the right kind of debt, that it was all manageable. There was, kind of an end in sight to it. So, creating the agility financially, most of it was already done. We, made a few small tweaks, stress test our cash flow and things like that. And then operational agility, Again, it was something that we had started kind of a couple of years ago. So, this is creating agility in our org structure, in the way that we assemble and disassemble teams, in the way that we make decisions as a company. Again, trying to push it down as close to the front lines as possible. Trying to run small experiments, get feedback, adapt, run another experiment, get feedback, adapt. We call that the OODA loop, OODA, observe, orient, decide, act. So for us right now, and we're still maintaining the same mindset with prioritizing agility over everything else, because I think that for us and our generation, is probably an unprecedented amount of uncertainty that we're facing right now.
Can you give us an example of how that's put into practice, being agile and using that OODA loop?
Mm-hmm. So we did in June, we actually did our first ever virtual launch. So we went from February only selling via bricks and mortar, model homes, sales centers, what have you, to June selling fully virtually, no sales center, no model home, which means that we had to adapt the way we took appointments to view homes or to talk to salespeople. We had to adapt doing agreements purchase and sale virtually, adapt taking deposits virtually, which I think we were at the time the first developer in Ontario to be able to do that, doing color appointments virtually, and doing pre-delivery inspections virtually. And so basically how we did it, we would put a plan together, release it, put it into the market, get feedback from the front lines, adapt it, do it again for the next one, get feedback from the front lines, adapt it, do it again for the next one, and keep that loop going. So I think we've done 3 or 4 virtual launches now, and we keep getting better at it every time. And I think moving forward, it's going to be it'll probably be a hybrid. I can't see us going back to full bricks and mortar at any point in the future. That said, I don't see us being fully virtually either, because at the end of the day, I think people still like to touch and feel finishes and walk through homes and things like that. But for us to develop the capability in such a short period of time, again, our team did an incredible job with that.
Right, and it's working quite well then. If now you're on your 3rd or 4th launch, you had one a couple days ago, right?
Incredible, yeah, it's working really well.
Interesting, and we've talked about some of the negatives of wood prices surging by 50% and just materials and all the hardships. What is the outlook now for housing? I thought housing is on fire. So that, how are your sales going today, and what do you predict them? How do you predict them in the future?
Sales are incredible.
There you go.
Yeah, I mean, it's defying, I think, anybody's expectations. As far as the future, I don't try to predict the future. That said, I think that there's a few things that I'm thinking of when I think about the future. So the first one, there's generally 3 things that have been driving residential real estate in Canada over the last decade or 2, and that's immigration, foreign capital, and cheap money. Cheap money, I think is probably here to stay for a couple of years. The other 2 we're not so sure about. I don't know how other countries in the world are going to react to capital flowing outside of their borders. We've definitely been seeing a trend towards a more nationalistic approach throughout the globe for the last few years. Whether COVID accelerates that or not in the medium to long term, I don't know. And immigration, I think, is probably the biggest one. So, Generally, I think we get 340,000 immigrants a year to Canada. Already in 2020, we're seeing 100,000 less. So how that affects the market, in 2021 and 2022, we're not quite sure yet. And then what happens with immigration in 21 and 22? Does it go back to 340,000? Does it get scaled back a little bit? If unemployment in Canada remains in double digits, is it still an attractive place for immigrants to come to? So there's just things that we're contemplating right now. I don't believe that you can try and time the market in our business and make predictions about the future. But I think it's important to consider things like that as we think about the future of the company.
That's interesting, and it's such a complicated thing to think about too, because even with the immigration, for instance, of 340,000 people coming to Canada every year, are some Canadians going to come back from the U.S., the 2 or 3 million we have over there, because of the political situation that they're dealing with? And I think we export 100,000 Canadians as well, but now our borders are closed. Are they going to, increase the demand by just not selling their houses? And it's challenging.
Yeah, that's a great point. And it very well could balance itself out in that way. And I think the other big question that I think will probably, how it unfolds will, dictate a lot about what happens over the next decade is, how our government is going to choose to pay back this debt that we are taking on to provide all this stimulus. And at the end of the day, there's 3 ways to pay back debt. It's austerity, raise taxes, or print money. So I think how they choose to deal with that is going to be a massive factor. Yeah,
we'll see. It might be tough. It might be tough for us young folks if they change, the capital gains inclusion rate, or if they, it's hard to know. What would be your top 3 important things to know when doing a residential development? Like the keys for success? And by that I mean, is it buying the land at an attractive price? Is it the efficiency of your sales operation? Is it executing and having the best connections to trades? Like what would you rank as the highest priorities? Not necessarily using those 3 examples.
That's a very good question.
For our audience, Lee does not have these questions. So
yeah. This one was out of the blue. I think in our business, when you consider IRR, timing is such a huge factor. And we see so many people buy land thinking that it's going to be 5-year land, and it turns into 20-year land. And it's fine and dandy that after 20 years people look at it and be like, oh my God, look how much money that guy's making. He bought this land for X 20 years ago. But when you count the capital that's been sitting in that land and compounded over 20 years, you ask yourself, how great of an investment was it? And I think that in our business, we see the home runs and the grand slams, and we put them under a spotlight and be like, wow, this person really hit it out of the park. What we don't talk about are the people that, grind it out for 20 or 25 years. And, when you back out the numbers, it turns into a 3 or 4% IRR. So I think, in our business, timing is always something that we keep front of mind with everything. On any pro forma, I think, the delta of a year or two probably make or break you. So that's number 1. Number 2, I think, your capital stack when you buy land, if you look at the multi-generational families that have been really, really successful in our industry. They've been through a number of downturns. They've all been able to hold their assets through those downturns. And kind of looping back to not timing the market. The thing is, we don't know when they're going to happen, but we know they do happen, right? And our business is cyclical. So I think always being positioned to be able to withstand a downturn is a huge key to success in our industry.
Interesting. So that okay. So don't create a land bank that's too big, and also it has to be positioned well, and so you have to buy strategically, and also probably don't put down too much leverage.
I think you can, land bank is good, but if you buy 20-year land, you have to value it as 20-year land. You can't buy 20-year land and value it as 3-year land. I think that's where it becomes tricky, right? Like, I think if you buy 20-year land and it's valued as 20-year land, and you pay 20-year land price, and you start a great land bank, I mean, that's how a lot of people have done incredibly well in this business. Like, some of the families that are on their 3rd generation right now.
Right.
I think you run into challenges when you're buying 20-year land, but you're paying 3-year land prices for it.
Okay.
Gotcha.
So I think it's about understanding that municipal process and being realistic about how long it's going to take to develop your land.
Gotcha. It'd be helpful if you had a representative sitting in on every city council meeting and understanding when they say, okay, we need to do a new urban plan for this area, then you go buy the land.
Yeah. And oftentimes we do. We have people go to council meetings quite often.
Yeah.
When you're buying land, Lee, is there any form of, like, I don't know, I guess it's called gambling, or in the sense that you might be sort of guessing what the municipality is going to do in terms of the urban boundary expansion? Yeah,
I think with the amount of competition that there is for land right now, I think generally, and I mean, you guys probably see this in commercial a lot too. Generally, the trend going more towards auctions than off-market deals. Usually it's the person that's kind of stretching the most on their assumptions and their pro forma that wins the auction, right? So it's always the greater fool theory, where whoever wins the auction, everybody else like, oh, that guy overpaid. So yeah, there certainly is an element where with the competition that there is for land, stretching on the assumptions in your pro forma, whether it's your price per square foot on finished units, or your price per front foot on finished land, or your costs, that seems to be the name of the game right now when it comes to buying land.
Gotcha. Switching gears slightly, getting more into a bit more personal. What was the favorite deal that you've done in your 20 years of history at Fusion?
So it would definitely be the Metalworks deal. So just to give you a flavor, Metalworks is a high-rise project that we're doing here in Guelph. It's an 80-acre piece of land, 650 units of residential. There's an old heritage building that's commercial that we've restored. Beautiful urban river walk, tons of amenities. The reason why it's my favorite deal is, when we started looking at that land, which was about 10 years ago, I think it was around 2010. At that time, there had never been a condominium building built in downtown Guelph, right? So we're looking at this 8-acre piece of land, and there was no established market for condos in downtown Guelph. The site was terribly contaminated. There was almost 200-year-old heritage building on it that we had no idea what we were going to do with. There was a very, very active neighborhood group that had been opposing any development by the previous owners on this for 5 or 10 years before we got involved. Plus high bedrock, high water table, like you name it. So there was a couple of challenges associated with this. But it was a gorgeous piece of land, and we really felt like it had the opportunity to be an iconic development that would make a completely lasting impact and transformation of the downtown. So we bought it, and what it resulted in, and what we're really proud of is number one, when we went to council with the rezoning, the neighborhood group, staff, and us all went in favor of the proposal. And it's something we're really proud of because I feel like a lot of people, it's a very historic neighborhood in Guelph, and a lot of people have been living there for generations. Like, it's one of those neighborhoods where houses get passed on generation to generation. And for us to be able to go into and engage with that group in a way that we could create something that we were both proud of, made me really happy, and it's something that I'm very proud of. And now we're constructing our third phase. The development has been incredible. The Heritage Building has been restored. We've put a micro distillery in the Heritage Building, which has been so well received. We've opened access up to the river, to the public. So, all in all, we're incredibly proud of it, and it's gone probably better than we ever expected.
Just talking on the one point, how important is it to have the community on your side? Because you talk about that community group that sort of lobbied against the previous owner and obviously probably, shut them down at city council and stuff. Like, how often do you have to deal with that? Like,
yeah, I honestly, I try not to. Yeah, well, more so from the standpoint that, I don't know, I know this is going to sound weird for a developer saying this, but it's just not the energy that I want to put into the world. I really feel like in cases like this that there's always opportunities, but you have to be willing to sit down, not just listen, but understand. And for me, the types of developments that I want to do, that my company wants to do, are things that inspire us, things that because I wake up early. When I wake up at 5:30 in the morning, when I put my feet on the ground, I want to be excited for what I'm going to do that day. And I don't know, fighting people doesn't really excite me. Doing projects that are transformational is inspiring and exciting. Making impact in the community is inspiring and exciting. So as much as we can, we try to avoid those types of situations. It's not always possible, but we try to avoid it as much as we can.
Gotcha. So just a bit on the flip side, you talked about a bit about your favorite deal. What would be, your biggest mistake or your least favorite deal that you've done?
Yeah. So back in 2007 or 2008, there was a developer that we did a lot of business with that had lots in Tillsonburg. And he kept saying, Lee, come on, you got to buy these lots in Tillsonburg. And I kept saying, no, I have my hands full here. And finally he came, and he had, a really great piece of land in Guelph. And we were kind of negotiating through it. And he's like, well, listen, you can have it if you take the lots in Tillsonburg. And, so at the time we were building in London. And so I looked at it and I said, like how hard can this be? And so we bought these lots in Tillsonburg. We were very confident, by Tillsonburg standards, we're, a bigger builder. Hey, we're going to come in, we're going to do what we do, clean this stuff up and, and be on our way. we got destroyed by the local guys. Like we got killed. You know, we didn't understand who the buyer was. So we had the wrong types of homes on the wrong types of lots. We had no relationships with the local community, so no relationships with realtors, with counselors, with local businesses. And what it resulted in was, you know, not making very many sales. And then basically us having to buy our way out of the deal. You know, kind of lose a little bit on every house so we can kind of get out of the deal. And you know what I learned from it is that you know, number one, real estate's a local business, and if you don't understand the local buyer and you don't understand the local market, the guys that do, or the people that do, will always win. And number two, it's, you know, don't make small bets on new markets. Like, I think if you're going into a new market, it's a big commitment. There's a lot of time, energy, and resources that need to be put into going into that new market. But generally, if it's a small bet you're making on that market, you're not going to devote the time, energy, and resources necessary, right? So making like really small bets on new markets is a risky thing. As weird as that sounds.
Yeah. Don't go to Tillsonburg.
Tillsonburg is a great city and a great market. We just did it all wrong. Like we completely we thought we could come into Tillsonburg with the same product we were building in London and the same product we were building in Guelph, and just go in and you know, kind of go about our business the same way as we did in those two markets, and we were completely wrong. It's a different buyer with different expectations, different competition and things, and we were, you know, unaware of all of that.
You gotta do your research.
Okay, Lee, so imagine years from now, many years from now, you live a long and successful life well into your old age, and it's your last day, and for, you know, your friends and family and everyone's gathered around you, and for whatever reason, every book that you've written, interview you've done, podcast you've filmed, they've all been erased, and you have 3 short notes to write to your friends and family and the people who love you about how to live your life or anything you want. What do you put on those notes?
Great question.
Tough question.
Very tough question. Very tough question. What do I put on the notes? Number one, I would say, you know, and this is something that I've learned over the years, is, you know, make decisions about how you want to feel, not what you want to do. You know, so it kind of goes back to what we were talking about, you know, a few minutes ago with getting up at 5 or 5:30 in the morning and it's dark outside and putting your feet on the ground. You know, at some points, you know, making decisions based on, you know, I have to build so many houses or make so much money. Those aren't the things that necessarily make you feel good. And I found when I started making decisions about how I want to feel, man, getting up at 5 or 5:30 in the morning is awesome. And, you know, most of the time, I'm, you know, excited to put my feet on the ground. I can't wait to get out of the shower and get to the office. So I'd say that's number one. Number two, never compromise your personal values for any deal or any opportunity or any employee, because again, I think that, you know, those are the things that for me tend to really drain my energy. You know, when I'm going to bed and, you know, the last thing I'm thinking of before I fall asleep is, you know, a bad partnership or, you know, an employee in the company that, you know, might be causing issues and things like that. Again, it's not what I want to spend it's not what I want to spend my mind space thinking of and doing. And for me, there's no payoff that would make it worth it. And number 3, oh boy. Okay, I can't think of number 3 right now.
Okay. All right. Well, that was very good. So thank you so much, Lee, for joining us. I'm excited. Like, you sold me, you know.
You got new competition, Lee.
The residential home life.
Just do it. Just do it.
Yeah, yeah. But thank you so much for joining us, and I'm sure our audience is going to learn a ton from this.
Awesome. Well, thank you both for having me. It was a pleasure to meet both of you and an honor to be on your podcast. So thank you.
Thanks, Lee.